Hello, I'm Finola Burke from RaaS Research Group, and we're focusing today on spatial data and digital twin solutions group, Pointerra, ASX ticker 3DP. Joining me to discuss the recent Q3 result and outlook is CEO and co-founder Ian Olson. Welcome back, Ian.
Thanks, Finola. Great to spend some time with you, and look forward to getting into the weeds a bit.
Yes. Look, the Q3 cash receipts were disappointing. I mean, there's no other word for it. But why are customers being slow to pay, and what can you do to arrest that?
Sure. The Q3 receipts were disappointing, Finola. I think it was the lowest quarter since the back end of calendar 21. So it hasn't been a great trend the last few quarters. And despite announcing a sizable contract with one of our long-standing customers early in March, and that contract we started negotiating that at the back end of last year. So what you've got still, and we'll get to later what we're doing about managing the concentration risk. We've still got at this point with our paying customers a concentration risk around the US utility sector. So I think we've been pretty consistent over the last year or so talking about how calendar 23, their fiscal 23 was a period of looking inwards, trying to figure out how to spend their federal funds around network resilience and how to deal with the rising interest rate environment, how to deal with the billions and near on trillions of dollars they've got to put into the ground to manage the change in the energy mix through solar, through wind, through shutting down traditional generation, et cetera, et cetera. So they did a lot of internal planning, a lot of introspection, and that meant they didn't spend a lot of money outside of their business acquiring remote sensing data so that they could get about their standard sustaining capex and their repairs and maintenance opex. So we're downstream from that. So they spend, some of our customers, as I've said before, spend 30 to 40 million US a year acquiring remote sensing data, anywhere from satellite to high altitude aerial, to helicopter, to drone, to mobile mounted. And that's where we when they're spending that money, that's where we come. We have a role to play in helping them get answers and insight from that data with a degree of accuracy and a speed and scale that they haven't seen before. So if they're not buying that data, that's put a bit of basically their programs halt. And we've talked before about programs being delayed, programs holding, programs resolving. So that has been a theme. Doesn't make reading 770 grand for a quarter any more appealing. That said, there's plenty of invoicing in the quarter and plenty of invoicing early in April, and with a few chips falling a different way, it would have been a close to cash flow break even quarter. So the market's clearly asking the question of how long is it going to take you guys to turn this around, and we're very confident in the US utility space in terms of what the outlook is for the next quarter, for our fiscal 25, for their fiscal 24 and fiscal 25, with all our existing customers and the prospects, unsticking these stuck programs and starting to spend money. I think last week Entergy, who finally made an announcement to their market, to their customers and to the capital markets about their program, that we've got a big part to play in. And we made the announcement about the Energy program July, August last year. So for that to not progress to the extent that we thought it would, from a timing perspective, has really impacted our couple of recent quarters. But we're very confident around the outlook for that sector. And I was in February, I was at Geo Week in Denver, which is possibly the world's second largest, after Intergeo in Germany, the world's second largest geospatial sector conference. So there was a lot of buzz there from the geospatial community around the amount of money that was going to be spent in North America over the coming 5 years around acquiring data and interpreting it to deal with this near on $1 trillion that needs to get into the ground, across road, rail, power, and water. So it's a pretty long answer, and it doesn't make Q3 any more pleasant reading. But we're as confident as we've been in the last couple of years about the outlook for the US utility sector. And later in this discussion, we can talk about what we've done in our business over the last 9 months to try and reduce our reliance and therefore our risk associated with that sector, which is, when it's humming, spits out chunky contracts like the the $3 million one from our existing customer in the southeast that we announced earlier in the quarter.
You have talked a little bit previously about waiting on some renewals from some of those long-standing utility customers. Are they still there? Have they renewed, or are you still doing negotiations?
Yeah, so I think it's a question that probably warrants a discussion around ACV and ARR. And we, back in calendar 21, and into the early parts of calendar 22, those programs were very consistent, and that gave us the confidence. They were renewing each year. And it was work that, repairs and maintenance, sustaining CapEx. I need data. I need to interpret it. I need to do it every year. Some customers twice a year. So that gave us the confidence to include those programs in ACV. We as you know, we halted reporting ACV when we realised over a year ago now that those programs that appeared to be annual were perhaps going to be not semi-annual, but there was this big sort of, it was stuck. The programs still needed to be done, but the data hadn't been acquired, so we're just sitting there waiting. So, someone asked me the other day, what would your ARR be if all those customers went ahead, and all those programs that you'd included in ACV, restarted, and that number would be close to that US dollar 18 to 20 mil ACV number that we had, a couple or 18 months ago, 15 months ago. So they're all there. None of them have said, bugger off, we don't need you. We found a better way to do it. We don't want to use your platform anymore. The capture community, in the last 12 to 18 months, the capture community who perhaps been threatened by our ability to perhaps do part of their job a bit quicker. We've spent a lot of time and experienced a lot of pain in helping those guys understand that we actually help make their business more profitable, and we're not a threat to them. We're actually removing low margin revenue and high cost from their business, and we stop them from sweating their expensive aerial sensor platforms a lot harder. So there's been a real confluence of the US utilities wanting to start spending money again, their aerial capture customers, or contractors, I should say, understanding that we have a role to play, that we're not threatening their business, and we're actually helping them do more flying, do more driving, and basically, making the whole story a lot more compact from a time to capture to time to answer perspective. And that encourages the utilities to spend more money and to have more confidence. Utilities had been used to waiting 6-12 months to get a data set, let alone the answer from the data. And they'd been conditioned to that over many years through the process of processing, interpreting, through the time frame it was taking. So that's a story that Pointerra 3D changed. But in order to grow your business and grow revenues and turn ourselves into what we want to be, which is a high growth, profitable business with sustained recurring revenues, you have to change people's behaviour. So that's the customer side, who need to integrate our platform into their workflows, and of course the capture community, who are the people that generate the data. And so that's changed materially in the last 18 months to 2 years, in a positive sense. So lots more work to do, but we're seeing the results of that change in perspective, as measured by the size of our sales pipeline and our views on our TAMs, total addressable markets, for each of those sectors that we chase.
And then you flagged in your quarterly that cash receipts have improved in April, just over $1 million that's come through the door. Having ended the March quarter with less than $1 million in the bank, is the outlook for cash receipts sufficient to maintain the business, or do you think you're going to need to raise additional capital?
Sure. So at this point, we're really confident, Finola, in the collections that we've got lined up for May and June, and that should see us as we forecast, or not forecast, as we discussed in the quarterly, that we should be able to generate a cash flow positive quarter for June. That said, we have the big lumpy payments out of the business monthly, and it's typically payroll, and then our customers pay when they pay. So yeah, having around $1 million in the bank, and I think there was 1.5 at the end of the previous quarter, albeit that we had strong collections in April, and we'll be halfway to April's numbers sort of by the end of next week. We're reasonably comfortable with the cash position, but we've got a view that I think the market's got a view that we're come raised. And so my answer would be, you never say no. You know, we raised $2 million last year. We hadn't raised any money prior to that since July of 2020 during COVID, when we did that small placement with Bevan, and then we raised $1 million at 8 cents in March from one of my co-founders and our former chairman, Rob Newman, who's spending part of his time in North America. He's got family over there, and Australia, and is helping us immeasurably with the experiences he had with Nearmap in North America. So yeah, we're pretty comfortable at the moment, but you never say never.
And what progress have you made with your partnerships with, what progress have your partnerships with Emerson, JWS and Esri made in delivering prospects and revenue?
Yeah, Finola, I'll go back to the February conference, Geo Week. We had a booth at Geo Week and for the second year, and the ROI was 10x for us on in terms of either one customers or really well qualified customers versus cost of holding the show was 10x improvement over last year, and last year was a good return on investment. So we had a great conference, but Emerson was there. We'd announced our partnership. Dave Lowe, our global head of revenue, and who's also head of our partnerships, has done some podcasts with the Emerson team, and they're pretty easy to find if you just Google Emerson Pointerra podcast, which did a deeper dive into what we're doing, how we're helping Emerson customers with their SLAM-based LiDAR platform, and they've got an indirect sales model, Emerson, so they're out there selling through a global reseller network, and we were able to spend a day with their global resellers who were in town to attend the conference. But again, we've been able to do a real deep dive with their resellers, and the compelling outcome, or what really resonated for the resellers was, hey, this partnership and this tie-up between the Emerson software and the Pointerra cloud platform is going to help us sell more units. So the sales pipeline we'd class it as material at the moment out of that Emerson partnership. So we're really excited about that, and I think at Sydney Build, which is this week in Sydney. I'm not sure which convention centre or hotel it's at, but we're again joint venturing or spending time with the Emerson team at their impressive stand at that trade show. If anyone wants to get down and have a look and talk to Dave, who'll be there. The other partnerships, Esri, AWS, they're bigger beasts. Emerson is an agile, private equity funded, high aspirational, high growth aspirational, early stage business like ours. So there's a lot of alignment there in terms of culture and tempo and pace. The pace at which we want to do things. The Esri and AWS opportunities are massive, and they're contributing to the sales pipeline, but they're a slower moving beast. And one partnership that we had that I guess we left out of that question, and perhaps we can come to it later, but I'll quickly throw it in now, is the one we announced with eSolutions, who's the biggest systems integrator in the Middle East region. We've had a fantastic couple of months getting to know their people and have advanced and spent. We've had guys in Abu Dhabi and Dubai over the past 6 or 8 weeks, talking to some of the state-owned utility companies, and there are some sizable opportunities for the deployment of a digital twin platform, and the size of those organisations dwarfs. Is significant when compared to the tier 1 oil and gas, tier 1 utility customers that we typically deal with. They're simply massive. So having a partner there who can do the systems integration and the deployment is fantastic, because it means we don't need to deploy people and capital to that region. But the size of the opportunity, is enormous. On an ARR basis, it would be. When fully deployed in some of these organizations, it's 10-figure US recurring revenue. Now, that's probably a 2 to 3 year process to deploy fully, and revenue starts to flow, from the get-go. But they're massive opportunities. So we couldn't be happier with that, with the partnership we've got with these solutions in that part of the world, and it's a blueprint for us, I guess. In looking into Western Europe as to how best to take advantage of the digital twin opportunities there without having to put a lot of people on the ground.
Mm-hmm. I'm going to come back to that, but within this last result, I mean, while you had lower cash receipts, you also had a big reduction in costs, particularly staff costs. Looking at your cost base, Ian, do you have the team and resources in place to execute your sales strategy?
Yeah, so the reduction in headcount was mostly around production. So if you think about our business, we've got our BD and sales guys, we've got our product and production guys, and then we've got and girls, and then we've got our R&D and software engineering and dev team. In the product and production team, there a lot. We had people in that part of the business in the US who were dealing with a lot of the projects and programs that we were working on from calendar 21 and calendar 22. So we've been able to turn those costs off and haven't had to turn off BD and sales costs. So and we've probably overinvested from a dollar perspective, but not a head count. I think we were a softly approach, I guess, a few years back with the level of appointment at BD and sales. And what we've learned, particularly for the larger enterprise sales, is that you need a very sophisticated, experienced individual. And so the appointments that we've made in North America and in this part of the world, and EMEA, reflect that and reflect the challenges and the sophistication required for executing those sorts of opportunities. And those two individuals, Anthony here and Joe over in the US, have made a big impact on our business. So yeah, we have been able to rip some cost out, but it hasn't been at R&D and product development end, and it hasn't been at BD and sales. So we're pretty confident about executing. Thanks, but do need to hire more into the future.
So that's what brought me to my next question. I mean, you did touch on this earlier. You want to expand away from just being reliant on one sector, on utilities. How is that going, and what's the outlook for that?
Sure. So we had an unfortunate hiccup with our regulator in March when we had a material contract award. We had a gap between the need to make that announcement and the time it took that customer to the 150 billion market cap Fortune 500 company who took more than unfortunately more time than we had to clear the announcement. And so we spent a little bit of time with our stock suspended back in March, which was unfortunate. But in the quarterly, what we did announce or disclose, and we've been consistent with this in the past with this messaging, is that we do expect further contracts from that customer during calendar 24. We're intimately involved with their resilience program, with their vegetation management program, with their storm response program, and have been since 2020. So it's our signature customer. It's our biggest, most long-standing customer. They've been very loyal and supportive to us. So that gives us a great base in North America to reinvigorate as the other utilities start to come back online, as we talked about earlier, to get that cash flow, that revenue and cash flow starting to pile in again. But given the pain we've been through with the reliance on that sector, or the over reliance on that sector, and not that we expect that sector to have another pause. I see that as most unlikely. As I said at the outset of this discussion, we have made steps to diversify away from that sector so that we have more of a spread and perhaps less volatility. So mining, oil and gas, coming off a low base, I should say, have matured fantastically in the last 6 months. Facilities management, starting with the Amazon program that we announced last January, and we disclosed in the quarterly that we're not even 5 or 10% through that program, and Amazon's been going through its own internal machinations, and that'll happen. Hopefully it'll start to happen this quarter, as we mentioned to the market, and we've got other facilities management opportunities that we've been able to generate off the back of that sort of Amazon experience for really diverse organizations in property property ownership. So, property funds and trusts, sporting organisations, big global organisations that have a number of very large facilities that are geographically dislocated. It's the classic linear infrastructure assets for us. Road, rail, power, water was a great opportunity. People have got assets spread over massive areas. How do they know the condition of those assets? Okay, they buy LiDAR, they buy imagery. We help them interpret that. When you think about facilities, whether it's mining, oil and gas, or built form that doesn't have process infrastructure in it, they're again for big tier 1 organisations, they're spread not just in a region, they're spread globally. So the ability to have a standardised platform, a common data environment where all the digital twin data can live, where if it is process related, there's Internet of Things being information, SCADA information being brought into the digital twin. Those, we've been pushing really hard in those sectors, because the prize is as big as the utility sector, and it's something that we hadn't focused on until now, where we brought some people in with a background in that space, particularly Anthony, and his years of experience with IBM before joining us has been a fantastic asset to the business. So yeah, we're pleased with the decision made 9 months ago now to diversify some of our BD and sales effort into different sectors, and we're now starting to see the results of that investment.
Well, thank you, Ian, for taking the time to discuss Pointerra's Q3 results and outlook. I'm looking forward to catching up with you through the course of the next 12 months to check on your progress.
Thank you, Finola, and appreciate your time.